Everybody, good morning, almost good afternoon. It's almost noon here on the 16th of December 2021. I had a request, a special request from a group of people to do an analysis on AMRS. Before I get into this analysis, just to let you know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion on the market, and also I want to point out that I have not been paid to do any analysis on this stock. It was simply a request that came in, and I am fulfilling that request. So let's go ahead and move on in and take a look at the chart. So this stock been trading since late 2010. Had its IPO up here, and actually it's higher than it actually was because it went through a reverse stock split in about mid 2017. So that reverse stock split was 1 to 15. So it looks, if my calculations are correct, if it opened at about 250. It really opened at about $16.67. So it didn't actually trade up here in this price range. The chart just shows that because it went down in value so much. And in actuality, when it went through its split, that was at $3.05, and we'll just say $3. It was actually trading down here at about 20 cents, right? So if you bought down here, though, I would say that probably was not a bad decision. And I'm just going to talk a little bit about why I say that is the case. One of the things that we talk about in our Discord server is trend-based fib extensions and just trying to figure out where targets are based on that. So from the top, right, and as far as the length of the moves work, the price isn't the same, but the length of the move is, regardless. I could multiply this by 1,000, and it would still be the same size of a move. So from our dominant pivot high up here that we had in early 2011, we had a big significant pullback. Let's see here, how much of a percentage move was that? 95%. It dropped basically from the top after its IPO, and from its IPO, it went up 100 and 113% or so. So it went up 113%, but then dropped 90 some percent. What did we say? Was it 95? About 95% it dropped. And from down here, it had a little bit of a move up, so about 283%. This happened to move in 3 waves. So I count an ABC here. So I count this as the completion of really a bear flag. We could see a few different things going on here. We had a trend line which eventually did break down. Let me just go ahead and fix this real quick here. I don't want it to extend to the right. So what we had here, and let me just change the color on this so we can highlight it a little bit more, because this is important. That it's important that you see this red line. We had a move to the bottom here, and then a retest right here, and I'm going to move it down just a little bit because we've got that right there. Let me just zoom in so we can see this just a little bit more. Right here, we had the low here, we had a test here, we had a test here which eventually broke down, and then these are the kinds of things I talk about all the time. We had a bearish retest. We had a bearish retest, which off the low, that was a decent move. You can't deny that. That went up almost 100%. It went up 87, 88%. That was a decent move up. At the time it was trading at about $23.50, and it went up to almost $50. There's a decent move, but it was a bearish retest, and it failed from there. So let me just zoom back out here. Bearish retest right back here, and then we eventually broke down. Okay, we broke down, and again, here's another example of a bearish retest and a failure. So this trend line right here, I'll just zoom in on this because this is a common trend that we're seeing. We had a support, pullback support, pullback support, breakdown, find a little bit of support, breakdown, rejection, rejection, and then ultimately what we had down here was another big pullback. But that was a rejection as well. So these trend lines are going to be important moving forward. Okay, so again, we had this rejection here, clean rejection here, a front run rejection right here. I can pull this out, and I would be willing to bet that there is some confluence with this trend line because I think it's important. So first initial push right here, I'm going to talk about this pivot right here. We had a first initial push. This, again, a good throwback. It was rejected, finally broke through and found some support there. So this trend line is important, okay? Right here, we flew through it, right? And this was all the way back in November, okay? A good throwback there. Now, where are we at from here? All right, so what I'm looking at right here is I'm looking at from the bottom, you know, we've got a nice little 1, 2, 3, A, B, C, 4, and then I move up into the 5. So I can see 5 waves here. From there, it's a little choppy. It's a little choppy. I'm not going to try and dig a correction out of this, but what it looks to me is complex, something along the lines of W, X, Y, X, Z. Not super common, but it's not out of the ordinary. So from here, I've got my dominant pivot low, dominant pivot high, and my pullback, which has my target at the 1618, and it already hit that. So that target was at about $20.46. It hit that target. Now what we're in the middle of is, you know, another pullback. My target for the pullback is going to be right down here at about 466. Couple things that I do want to point out. So on our server, we talk a lot about our indicator. We talk a lot about, you know, like how this is going to project future moves. And what I can say right now is, 2 days ago was a great time to be buying. Great time to be buying, right around $5. And what are some of the reasons why? Okay, let's talk about some of the reasons why this could be good for buying. Let me just make this a little bit bigger. Okay, a couple things that I want to point out is right here, we're creating a lower low. Okay, and then on the indicator, you know, right here, we've got a lower low on a more localized fashion. It's a little more exaggerated. And then as far as the hourly goes, we're creating a little bit of a higher low on that indicator. When we get to higher time frames, you've got the daily, which is right here. It's hasn't confirmed yet, right? To be fair, hasn't confirmed, but there's potential for there to be a higher low on that as well. Still unconfirmed. Although the hourly bullish divergence has confirmed. It's already started to play out. And again, it's still possible it comes back down here to $5, but the way that this weekly wave is laid out, you know, historically speaking, every time the weekly wave has gotten down in this area, and it's actually lower than it has been. Let me just hide a bunch of stuff on here for right now. Let me hide the hourly, the 3 hour, the daily. Let me hide all of those. Let me hide the background colors. I want to just get the weekly wave on here, okay? Because going to the daily, every time it's gotten down this low, all right, so this low right here, let's just take a look at the last few times it was this low, right here. It was this low all the way back here, and what happened after that? Well, let's just take a look. So let's get the date and price range, and let's just take a look at this. So that's here from this low, and let's say you didn't get the very bottom, but let's say you got close. Right there from bottom to the top, right? And what I'm doing is I'm looking at this top right here, getting back into the overbought condition. It went up 239%. Okay, next time it was kind of close, was right around here. We actually had some bullish divergence on there, but let's just say that we bought right here, and we held that until, again, we were over here in overbought. Where was that? Well, that was another 125%. All right, next time was, this wasn't super exaggerated, but it was an oversold at any rate. That was going to be about right here, and when it got into overbought, that was a 67% move. Right here, with some bullish divergence. Next time it got into the overbought territory was right here. That was a 76% trade. Okay. Next time was right here. Again, we had some bullish divergence, but the next time it got into overbought, technically was it was actually about right here at that bearish retest, which was a 348% trade. This one wasn't great because you had a lot of drawdown, but this one, really no drawdown. This one had a little bit of drawdown, went up 130%. This one, no drawdown, went up 67%. This one had chopped a bit, but eventually you ended up with some profit on that particular trade as well. And we're back down here again, right? So I wouldn't be rushing into a trade, but you kind of get the general idea. Every time you get something that's down here and oversold, you take it until it's back up and overbought, and you can pull out a little bit of profit on that. That was a 60% trade. Again, right back here. Get into this trade back here. Next time it was an overbought was right here. It poked into that and was a 225% trade. You guys get the idea. This is what we look at when we're trying to get into longer term swings. And this actually has performed pretty well when you get down into these areas. Would I buy at $5? Well, let's just take a look. Let's take a look. Would I buy at $5? I'm going to just take a fib pull from this dominant pivot low here to our dominant pivot high up here. And I am on log scale. Let me see if my fib is on log. It's not. So let me fix that. Okay. We're bouncing off the 618 right now, 492. That was yesterday. Is that correct? It almost hit 492. It went down to 493. I would be a buyer at 492. Couple reasons why is the weekly wave is way oversold. Okay, and we've already gone over the reasons why I would be looking to be a longer term buyer there. Looking at all of these, you would, for this 348% trade, you'd be in this for almost a year, 357 days. This 80% trade, 244 days. This 67% trade, 68 days. 283 days for 130%, 116 days for 239%. Where am I looking for AMRS to go? Well, there's a couple targets that I would have for AMRS. So let me zoom out a little bit more. I'm going to add the 2618 to this. Okay. That's a very interesting target. Okay. I would conservatively be looking for $42, right? We're at $5 right now, which we have earnings that are coming up in March. So we'll kind of see how that goes. We'll see how that goes. But for now, what are we looking at for a trade on that? Now, again, this is just a hypothesis looking, at about 514. If you were to get into that trade right now and take that profit right there, that's a 700% trade, which is, it's actually pretty high. Stop loss on this, I would put on the other side of that 618. So, just full disclosure, I'd be taking a look at, let me just put that right here so we can adjust this. What kind of a stop loss would you put on this? Now, of course, you have huge upside potential. Personally, I'd be looking to get in right there at the 618, and then I'd be looking to get out probably somewhere around right here, which is a 25% loss. Now, from a risk management perspective, it's really not that great. But when you're looking at the reward, 760%, that's almost a 32 to 1 risk to reward ratio. You could go in light. Now, obviously, don't bet the farm. Don't go big on a trade like this, where the upside potential is huge, but your risk is also, it's pretty big as well. Your risk is pretty big. But I would say, it's worth a little nibble. If it gets down here into this area, maybe take another little nibble. So yeah, I think this is a good place to be putting some bets. So just kind of take that with a grain of salt. This is really just for education. We've just taken a look at historical trends, taken a look at this weekly wave that we have on our indicator. It looks pretty good based on the history. But also remember, based on the history, with the stop loss, you have to be very, very careful. And the reason why is because, for instance, right here, it looked great. It went down further, got some bullish divergence. That could absolutely happen. And what's going to happen if that happens? Well, very easily, this could move up, come down, stop you out, and then go up to hit its target. So I always advocate for risk management and for stop losses on equity trades. So you do have to be very careful with that. But I think it's worth taking a nibble here. Honestly, I think it's worth taking a nibble all the way down to 3.25. But I put this P&L on here, assuming that people are going to see this and they're going to say, oh, okay, well, I'm just going to go all in. Don't do that. Don't do that. But you can absolutely nibble, and nibble going lower. I would nibble down here to 323, which is where the 786 is. I believe we already hit our corrective target from the top. dominant pivot high, dominant pivot low, pullback. We had the 123.6, support, support, deep support, support, and then it moved up significantly, as we already know. And so we're down here at $5 with an upside target of about 42. How long is that going to take? Years. It's not going to happen overnight. As you can see, this trade right here, 348%, took 357 days. I expect this is going to take a significant amount of time before it goes up to $42. So if you're prepared to hold for a long period of time and you completely understand risk management and you don't bet big, right? Because I don't think this is something where you would want to bet big. So just be very careful with that. But again, watch for this weekly to curl and move up here to the top range, and that's where I'll be looking to get out, regardless of whether or not the target is at $42. Once this weekly wave gets all the way back up here into the overbought territory, you better be looking to get out, because you have seen what happens when it gets into overbought. Right here, overbought, pulled back. Right here, overbought, big pullback, right? We've seen this. Gets up here into overbought, huge pullback. Overbought, huge pullback. We get overbought, big pullback. Overbought, we have experienced the pullback. So regardless of whether or not I think that this is a good trade setup, you have to realize when you need to cut the position, when things get into overbought, especially on a weekly time frame, they're going to pull back. Worst case scenario, you sell, it keeps going, maybe. Better case scenario, you sell and it pulls back, well, then you can just recycle those profits. If you happen to take 300-400% on that position, don't put all that profit back into this. Put your original position back in this and take that 300-400% to the bank. It's the best thing that you could do. One of the best decisions that you could make. All right, guys, that is what I've got for you right now. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all the good stuff. And wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.